Here are the crypto top headlines covered in this video. Why XRP price might jump 70% versus BTC after the Bitcoin halving. Next, the SEC issues Wells notice to DeFi protocol Uniswap. Also, hashing it out. Are RWAs the future of crypto? Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: why XRP price might jump 70% versus BTC after the Bitcoin halving. Whale accumulation patterns and critical Bitcoin halving fractals suggest a significant rebound for XRP to BTC price in the upcoming months. XRP has lagged Bitcoin so far in 2024 in terms of price performance, falling around 2.5% year-to-date versus the top cryptocurrency's 60% gains in the same period. In turn, the XRP to BTC exchange rate is down 40% year-to-date. However, the pair shows signs of recovering in the days leading up to Bitcoin's halving in 2024. A constellation of bullish signals may buoy this momentum, potentially amplifying it following the event. XRP price post-halving fractal. Historically, XRP has demonstrated a tendency to outperform Bitcoin in periods surrounding halving events. For instance, the XRP to BTC pair rose by over 100% after the third Bitcoin halving in May 2020. Similarly, the pair jumped 85% around the second Bitcoin halving in July 2016. These patterns elevate the prospect of XRP outperforming Bitcoin following the upcoming halving on April 19th. The observed gains in XRP to BTC largely stem from a reduction in Bitcoin's dominance post-halving. This trend suggests that traders frequently rotate their investments from Bitcoin to altcoins following the event, ushering in a period commonly referred to as alt season. One reason is that altcoins can offer significant short-term gains due to their lower market caps and higher volatility compared to Bitcoin. XRP's technical patterns flip bullish. XRP to BTC has been trending inside a falling wedge pattern since February, categorized by its price fluctuating inside the area defined by two descending converging trend lines. A falling wedge pattern is typically a bullish reversal setup that resolves after the price breaks above its upper trend line and rises to length equal to the maximum distance between its upper and lower trend line. Applying the same rule of technical analysis on the ongoing XRP to BTC price trends adjusts its breakout target for April/May to 0.00001022 BTC, up around 16.75% from the current levels. In the 2024 outlook on a weekly time frame, XRP's price objective against Bitcoin is projected to reach its 50-week exponential moving average, or 50-week EMA, represented by the red wave in the chart below, at 0.00001449 BTC. This marks a substantial 70% increase from its present price points by June. Notably, traders have consistently set their sights on this same 50-week EMA wave as their bullish target following the previous two Bitcoin halvings. XRP whales return to accumulation. XRP is meanwhile also seeing aggressive accumulation by its wealthiest investors. For example, since the onset of March, there has been a noticeable uptick in the number of entities holding more than 1 million XRP tokens, and from April, the segment of holders with at least 100,000 XRP tokens has also begun to increase. This trend underscores the rising bullish sentiment among whales in anticipation of the Bitcoin halving. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, SEC issues Wells notice to DeFi protocol Uniswap. The U.S. SEC issued a Wells notice to the decentralized exchange Uniswap on April 10th, the team confirmed on social media. The United States Securities and Exchange Commission has issued a Wells notice to the decentralized exchange Uniswap. On X, Uniswap Chief Legal Officer Marvin Amori confirmed the regulator's notice on April 10th. Today's Wells notice against Uniswap is disappointing, but is not unexpected from this SEC, Amori wrote, arguing, if the SEC had authority over our self-custodial, non-intermediated products, it could tell us how to register them. It can't, and so it doesn't. It has provided no clarity and no guidance, as several SEC commissioners have stated in multiple dissents. A Wells notice is a formal notification issued by the SEC to inform a company or individual that the regulator's staff intends to recommend enforcement action against them. This notice gives the recipient an opportunity to provide a written explanation or argument, known as a Wells submission, as to why such action should not be taken. Uniswap enables automated token exchanges on the Ethereum blockchain, allowing users to swap several crypto tokens without needing traditional intermediaries like centralized exchanges. The SEC has been investigating Uniswap Labs, Uniswap's main developer, since 2021. The decentralized exchange, or DEX, has previously delisted several tokens from its platform, citing growing regulatory pressure. As part of its defense, Uniswap Labs previously claimed that it is only the software developer responsible for building the front-end portal to the app. The front end is separate from the Uniswap protocol itself, which is autonomous code released for public use. The Uniswap protocol, web app, and wallet don't meet the legal definitions of securities exchange or broker, said Amori, adding that the protocol welcomes regulations for crypto and clear rule of law that we expect in the U.S., not arbitrary enforcement and continued abuse of power. The SEC has issued similar notices in the past, warning about legal actions against crypto exchanges, Coinbase, and Binance. While the U.S. SEC unveils its latest legal action against crypto protocols, the European Union is advancing its Markets in Crypto Assets, or MiCA, regulation over decentralized finance, or DeFi protocols, including their front ends. The EU regulator is required to prepare a report by December 30th, 2024, assessing the feasibility of specific regulations for the decentralized finance market. The report will explore how decentralized systems, particularly those without a clear issuer or service provider, should be regulated in the region. Our next top headline, hashing it out, are RWAs the future of crypto? In episode 54 of Hashing It Out, Mika Yeakley, the co-founder of Kula DAO, discusses how tokenizing traditional illiquid assets opens up investment opportunities to a broader audience. In this episode of Cointelegraph's Hashing It Out podcast, host Alicia Owusu-Akyaw interviews Mika Yeakley, co-founder of Kula DAO, a project tokenizing a diverse collection of real-world assets, or RWA, on the blockchain, about the prospects of the sector in the Web3 space and what it means for developing markets. The episode also touches on other significant topics such as regulation and what RWAs on the blockchain mean for retail and institutional investors. Yeakley explains that tokenizing real-world assets can span across multiple asset types beyond what most people expect. He highlights that even though Kula started out by focusing on natural resources, the project quickly realized that anything with real-world value could be tokenized, including water resources, agricultural projects, and real estate developments. Based on the wide variety of RWAs that can be tokenized, Yeakley suggests that projects are more likely to benefit from having a diverse pool of assets, which is Kula's approach. He explains, well, when you talk to any savvy investor, anybody that's investing money for a long time, they're experienced at it. They're always going to say diversification is key. Yeakley breaks down the double DAO, a component of the Kula DAO governance structure, which aims to collate the best of Web 2 and Web 3 governance, ensuring checks and balances during the Decentralized Autonomous Organizations, or DAO, decision-making process. The double DAO provides asset-layered protection so that the voices and participation of key stakeholders are protected. The double DAO includes a regional DAO where local communities affected by the assets can actively participate in decision-making. He also highlights how the project's rollout in Zambia has led to changes at a partner mine in areas such as equal pay for women and the construction of social amenities through the voting process. Moving to regulation, Yeakley says it's difficult for projects in the sector to be regulated. Kula has received pre-approval from the Virtual Assets Regulatory Authority in Dubai and is set to become the first regulated RWA DAO to tokenize natural resources and commodities. Yeakley believes that regulation should be the first step and not the last in a sector with extensive regulation in the traditional financial landscape. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.